Hi everyone, I'm your lead educator at Trading Club 7U, and welcome to lesson 12 of our beginner's course. By the end of this lesson, you'll finally understand the difference between gambling and professional risk-taking, a crucial distinction that'll separate you from many failed traders. You've learned how to read charts, understand basic patterns, and develop a trading plan. But what happens when you trade? The key to success is understanding risk, and that's what we're going to explore today. Many beginners struggle with risk, and it's not because they're not clever or smart, it's simply because no one has taught them the fundamentals. The difference between gambling and professional risk-taking is simple. With gambling, you have no control over the outcome, and you're not taking thoughtful, calculated risks. Professional risk-taking, on the other hand, involves managing risk carefully, making informed decisions, and sticking to your plan. Think of it like this: gambling is like throwing a dart at a board with random numbers, while professional risk-taking is like carefully aiming for a target with a strategy in mind. Here's an example. Let's say you have a small stake, 100, and you decide to bet it all on a coin flip. You have a 50/50 chance of winning or losing, but the outcome is completely random and outside of your control. That's gambling. Now, imagine you have the same 100, and you decide to use it to buy 10 shares of a stock that's risen steadily over the past year. You've done your research, set a price target, and are prepared to cut your losses if things go wrong. That's professional risk-taking. Another key aspect of professional risk-taking is understanding the concept of position sizing. This means determining how much capital to allocate to each trade, based on your overall account size and risk tolerance. For instance, if you have 100,000 in your trading account, you should not risk more than 100 per trade, even if the potential profit is much higher. This is because the goal is not to win the most trades, but to minimize losses and protect your capital. One common mistake that beginners make is overextending themselves by taking on too much risk. This can lead to emotional decision-making, which is a recipe for disaster. When you're risk-adverse, you're more likely to cut losses too quickly, or get caught in a margin call. On the other hand, when you take on too much risk, you're more likely to see your account wiped out in a single losing trade. Another mistake is failing to diversify your portfolio. Imagine you've invested all your capital in just one stock, and it experiences a sudden downturn. Suddenly, you're facing a large loss, and you're forced to sell your shares at a low price. By diversifying your portfolio, you can minimize this risk, and ensure that even if one trade goes wrong, others can still make up for the loss. Now, let's discuss some common rookie mistakes in risk management. Many beginners think they can somehow control market outcomes, or rely on luck to make trades profitable. However, successful traders don't rely on luck, they rely on careful planning, risk management, and discipline. They understand that markets are inherently unpredictable, and that the odds of success are based on probability, not destiny. For your homework, I want you to think about your own trading plan. Take a piece of paper, or open a demo chart, and write down your risk parameters. What are your maximum risk per trade? How will you manage losses if things go wrong? Will you use stop-loss orders, or rely on your own judgment to adjust your position? This exercise will help you see how professional risk-taking works in action. As you work through this exercise, consider the following scenario. You have 5,000 in your trading account, and you decide to risk 2 of it, or 100, on each trade. What would you do if the stock you invested in suddenly falls by 10? Would you cut your losses, or hold on for more? Think through different scenarios, and practice your risk management skills. Remember, trading is not a guaranteed way to make money, and it's not worth risking what you can't afford to lose. Always practice on a demo account or paper trading journal before risking real capital. Don't take advice from anyone who promises guaranteed profits or buy-sell signals. Your success depends on your own hard work, discipline, and attention to details. By understanding the difference between gambling and professional risk-taking, you'll be one step closer to becoming a successful trader. In our next lesson, we'll explore another crucial topic that'll make your trading even more effective. If you want to learn more, subscribe to our channel, join our community, and follow our social media accounts to get updates. We'll be here, providing guidance and support along the way. See you in the next lesson.